there's a lot going on in the world with regulation, governance, taxes. The world is changing fast. We went through a pretty tumultuous time not long ago. You know, so at QuickSwap, we built this project that did, at peak 1.5 billion a day in volume, and it was kind of a crazy thing that me as a co-founder, I actually turned down any tokens. And it was partially to be decentralized and cool to the community, but it was also because I was scared and I didn't want to get, nailed as some like securities thing. We actually turned down a $20 million investment from Sequoia too, because we were scared that if we sold tokens, could that make us like a security? So we went from that, where founders are like scared to take, the profit, to now everybody is doing everything. I guess this first question I'll ask to you, Josh. We have a lot of legal teams at our various portcos, and they're kind of telling us, I don't know if I should say this publicly, but they're basically, when we ask them questions that we used to ask, and they used to be like, be extra safe, be extra cautious. Now they're kind of telling us, you're probably okay. We're getting a lot more of those answers. How do you, first tell us who you are, Josh, and then, tell us, how are you looking at this? I know you're kind of a little more strict when I talk to you, though.
Just for you. I'm Josh Lawler. I'm a partner at Zebra Lawler. I and our firm do a lot of work in distributed ledger technology, agentic artificial intelligence. We've probably represented 120 to 150 clients in the space over the last 7 or 8 years. And notably, I do a lot of work with angels and a lot of the portfolio companies. So there's that. To your question, here's the thing. The law hasn't changed, but what was going on previously in the last administration was asinine. So, the thing there is everybody was very gun shy. Everybody's, cat in a room full of rocking chairs, because you had pronouncements coming out of the SEC that just made no sense. They were like flat out unconstitutional, wrong. So at that point, you're like, okay, well, how do I counsel my client on this? Answer: be careful. Don't rip anybody off. Don't create damages. That type of conservatism.
So, and in some cases, just like don't do business almost.
And we did a lot of regulatory arbitrage. It's like, first we're in Switzerland, then we're in the Caribbean. It's like, obviously the United States was excluded from lots of stuff because of the landscape. Where we are now is a really interesting place. The law still doesn't fit the technology. We don't have new law, Genius Act aside. But there's a genuine interest in kind of making it work. So, kind of first principles like don't rip people off, don't engage in asymmetric information transactions can really guide you fairly well. And then we also, thankfully, seem to have lost the idiocy of saying it's a token, therefore it's a security, which was a dumb statement from the very beginning, but, really chilled everything. So now we seem to recognize that a token is software and it is whatever it represents. And if what it represents is a classical security like a stock or bond, well, treat that like a security. If it's anything else, probably going to be treated as a commodity, because commodities are pretty much everything else. So yeah, you can do more.
And I hope I'm saying it right. Suhi Han, how do you feel about this as a lawyer? Has your legal opinion to your clients, has it shifted a bit since the change in regime in the U.S.?
Actually, my client is not really interested in the U.S. regime, because they are working in Korea and they have offices in Korea. But actually, with the Trump administration, also in Korea, there's have been something changed. As you know, new administrative have been coming to Korea in May this year, and they announced that they will make some new law, and they will make digital asset basic law until this year. So they this kind of things are making some companies have really a bright future, and they are anticipating the new law will come into Korea. And the situation is really similar to U.S. right now.
Okay, thank you for that. So, Lawler, you mentioned previously it was kind of like by default, everything is a security. So I was in Jackson Hole, I don't know, a few weeks ago for the Fed meeting in the Wyoming Blockchain Symposium, and I was talking to Paul Atkins about this actually. And interestingly, his opinion, I don't know, this was a private conversation, and we were drinking wine, so don't like use this against him. His opinions, I'm sure, were not that of the SEC, but just his own. But he basically was telling you he thinks most of this is not securities. And he was very strongly clear about that. One of the things you talked about, and this is something I'm really interested in, and I hope we can have some good dialogue about this here, but it was, so with Genius, and one of the things that was in Genius that I didn't love was that they said that the stablecoin issuers cannot give yield to consumers. And that is, to use your words, asinine. I think it's really messed up. I think it's on the level of just stealing from the regular people like inflation and like accredited investor laws. I think it's terrible. And I asked Paul, and he said the same thing. He said he really didn't like it, and we need to find some solutions. He said it was a good start, but that we need to find some solutions. And so towards the end of the night, after about an hour of talking about this, he said, Rock, how about this? What if we allowed stable coins to go into BTF wrappers, and in these wrappers, we could then give people the yield? And I said, Paul, that's brilliant. Can we do this? And he said, I don't know. And again, we were drinking wine, and he was like, I think we might be able to. Let me talk to my team. And okay. And then next day I come back to him and we're talking more about this. I thought a lot about it. I was like, okay, that's really cool, but it doesn't solve the issue of getting these yields to people in DeFi and people in other countries that are not banked. Someone in Nigeria who wants to get a yield. We need people to buy treasury bonds right now. And so if we need people to buy treasury bonds, I want the guy in Nigeria buying them without a KYC. And so I said, could we make a carve out maybe that we could have, if it's in DeFi and there's no custody, it's going into a smart contract, could we get people the yield? And he said, Rock, I don't know, that sounds more like an investment contract. But he said, he'll keep thinking about it. So what do you guys think about this? How do we get these yields to the consumers? And then to add to that, long question, guys. But in Clarity, the banks are fighting right now. The banks are fighting to not allow any workarounds. So like Coinbase is doing a workaround where they're getting people rewards programs. And these rewards programs we're not giving you the treasury yield, because that would be a security, but we're just giving you a thank you for being on Coinbase. It just so happens to be, it'll be a % of how much USDC you have. What do you guys think about this?
I'm happy to take it. Okay. So, yeah, the banking lobby has been heavily all over all of this, no question. And there is a major issue for them if people can get yield on stablecoins. There's also, and you mentioned the KYC issue, it is really hard to send revenue just to a coin holder. You don't know where they are. It could be in North Korea. You don't have any way to do the KYC. If they're in the United States, don't necessarily know how to do the tax reporting, which is a major hassle. So that's not surprising, but then you kind of answered the question yourself. How do we get yield to people? It's DeFi. And it's probably not government-sanctioned DeFi. It's probably DeFi from companies very much like the ones that pitch these competitions that kind of sit there and kind of go, okay, we figured out a way to get 12% yield to somebody. And whether that's sustainable or not, I don't know. There's math involved. I'm a lawyer. But
what about specifically the treasury yields? How can we get that to the consumer?
Yeah, I mean, I think, first off, they can buy treasury bonds to start with. I think with the stable coins, one of the biggest reasons why it has been pushed so hard is because it is going to be used by the unbanked in other countries. So while we're losing some dollar hegemony in terms of being, the world's currency for oil transactions, that's kind of going away, we're potentially gaining a bigger kind of use constituency in all the people in all the areas that have hyperinflated local currencies that can now get dollars without needing a bank account. All they need is a phone. So that's kind of huge, but getting them all yield is a little bit more of a bitch, quite honestly.
Well, it kind of goes, it goes against what a lot of people don't realize, the US dollar is a two-part system. It's a staking system. You have dollars, which the unsophisticated people, the stupid people, they hope will use dollars in their everyday life, and they take the inflation hit. And then the sophisticated people, the people who know how to buy treasuries, who can get around the system, who have like the right, people, then they stake their dollars and earn a yield through treasuries. But the banks are trying to stop us from getting this to the people. We should let the people get the same yields that the sophisticated people get.
I mean, I love the idea, but I think, there's the right tools for the job thing here. If I'm a person in a hyperinflation currency country, I need a medium of exchange. I'm not getting $1 because I'm expecting to get, 1.25% on my dollar. I'm using it because like I'm working, I'm getting paid in something, and I don't want it to be valueless the next day. And you don't need yield for that.
You guys.
Yeah. Thanks so much. Anyway, just by way of introduction, I'm Mark. I'm co-founder of Altor. I started my career as a private equity M&A lawyer, Clifford Chance, Morrison and Foster, before starting my own shop. We have created a niche in supporting projects as fractional in-house counsel. So maybe I can offer that side of the picture. So we've been talking about T-bills, treasuries. I think what we are seeing in the market from the project side is many ways, innovative ways to actually earn yield for retailers. So for example, synthetic assets backed by market neutral hedge funds, right? And different governance tokens, staking tokens, how you actually create more yield for different users. I think that's some way in which we can explore.
Like Athena, kind of.
Similar, exactly, right? But many, many different ways, right? Market neutral hedge funds, working with Plasma, etc., which is established chain. So we are seeing a lot more innovative products out in the market right now, synthetic assets in general, right? So as to offer more yield to retailers.
Maybe I can, a question for you, Noah, is on the same vein. There are a lot of people trying to find a workaround, not for treasury yields, but for things, for other kind of funds and yields and securities in general. You guys are pretty big in the securities space with Upside and your work, so Upside was a spin out from Republic, and you guys managed a lot of their security, their tokenization and security stuff, and actually building on-chain funds. And so there's a lot of people trying to find ways to get U.S. securities or any kind of thing that should be deemed a security or that the U.S. would deem a security to the masses. In the same kind of thing we're talking about here, but just it's the same problems, different kind of little field. But yeah, how are you guys dealing with this?
Yeah, I think it's funny. This came up in a conversation we had previously about
Louder.
Yeah, so I think in terms of global access, there are a lot of there's venue access itself. So I think that having rails that go everywhere in the world makes things more accessible. So that problem is very well solved by blockchain, and it also allows for a lot more venues to access these assets and to trade them. So that's one part, which is just can I access the market? The second part is, are the sizes of those assets of the right buy-in that makes it accessible? So one of the things on the Republic side is, can unaccredited investors in the U.S. access private market deals like SpaceX and Anthropic? Because really, there's incredibly low amount of return in the public markets, and all of that is all of the increase in value is actually occurring in private markets. And so I think that's a good objective is to gain more access through that function. And then I guess there's two ways of dealing with the AML KYC question. One is less things require AML KYC. The other is AML KYC becomes extremely easy and reusable and affordable. And I think that we will see. It's ultimately the regulators decide which things need the AML KYC. But if we do make the identity more portable, then it will also improve the access problem.
Through things like decentralized ID, I'm guessing.
Yeah, actually, this is a huge thing in RWA, is that because you have these transfer restricted tokens, they rely on you knowing something about the identity of the holder in order to determine what the transfer restrictions are. So at least the systems that we are creating now allow for the portability of identity across multiple contracts, so that if you've already been onboarded, you're onboarded into a decentralized system rather than just onto, say, one exchange. And that reusability of identity, it has a lot of benefits. Like, part of the reason that we don't have the same kind of liquidity in the RWA space is because of the fragmentation of identity and the intersection with the regulatory side. So both of those things are things that we're looking at very directly and solving within the current U.S. framework for securitized assets specifically.
So a lot of info there, but can we somehow get these securities to people in other countries? Either like, so some people are doing things like they are issuing the security or this wrapper of a security through a broker. The broker, call it, is not allowed to sell to U.S., but they're able to sell non-U.S., even though it's U.S. securities. It's kind of ridiculous. And then the little gray area is once it goes out of that broker's hands and it hits like secondary markets like DEXs, it's not in their jurisdiction anymore, the issuer. And so, and there are people doing this at kind of its starting at scale right now. And so is that viable? Like, the way I look at all this is Milton Friedman said we gotta Milton Friedman basically said we got to, in a sly or roundabout way, take money out of the hands of the government. And if we do that, we can make money good again. And I think that's what we have to do with DeFi, securities, all these things, is we have to find these workarounds that force the government to play ball with us. That's my opinion.
Yeah, I mean, as an operator, I try to make the rails as smooth as possible, which is my perspective. So I think what you're talking about is like Reg S rulings are issued under Reg S offshore, and then eventually it moves back into the U.S. It is tradable or it's tradable in other places. And there is a shorter time period before that trading can occur. The tokenization system that we built is very precise about the exact issuance dates, the location of the person, when they can begin to trade, and to make that as seamless as possible. So in a way, we've encoded those regulations in the most sophisticated way that we can, so that the rails can be as smooth as possible. And that's the position that we've chosen to take. It's a sort of risk assessment for us as an operator also about really wanting to serve the U.S. market first, because there's so much capital in the U.S. that doesn't have access to this. So that's the route that we've gone down, is like encode this as efficiently as possible to gain access that way. And then look for the changes that are happening on the regulatory side and follow them as close as we can. Do you have more on that?
Yeah, I mean, yeah. I could go into the whole Reg S piece of it and such, but I don't want to follow that answer. That was a good answer.
All right, let's talk about how the world is looking at securities versus commodities. So I think as part of, I believe, Clarity, right? They're saying that, certain things that are more commodity-like and more blue chip or like established, and I think that they actually worded something like that, which seemed weird to me. But anyways, basically, I think, Josh, you have some opinions on this, on the securities, commodities, Clarity, and all this.
Yeah, all right. So the first thing is everything is a commodity, including securities. Securities are just exempted from the Commodity Exchange Act. So, whether it's blue chip or not, it doesn't matter if it's my shoelace or it's a bar of gold or, it's your American flag pin. These are all commodities as far as the law goes. The Commodity Exchange Act really lays off the spot markets. And that's why, like, from a regulatory standpoint, as long as you're not doing, futures and leverage, if you're not a security, you're just a commodity, you kind of have a little bit of a free roll, which, is great. It's also probably going to go away under Clarity. They're likely expanding the control of the CFTC over the spot markets to kind of deal with a bunch of kind of the quasi-legal market making and things of that nature that's going on. But I think, what's really super interesting right now, if you're like a nerd about this stuff the way I am, is that the CFTC and the SEC are releasing joint statements. So they're clearly moving towards a place where disparate types of assets can be trading on the same venues. And, they also, I think, recognize that they can't stop it from a DEX perspective. If you're going to have a situation where you can have, a token trading for a share of tokenized stock on a DEX, there's not really a lot they can do to deal with that, quite honestly. And there's other reasons from a practical perspective why that's hard. I know that. But we're getting into a place where a lot of these distinctions that made sense in the 1930s just don't make sense anymore.
So, this for any of you, but do you guys think we will see a day in the near future where you can trade some version of a U.S. security on QuickSwap or Uniswap?
I mean, so I think when you throw in the DEXs, it gets very interesting. If you want to go a centralized exchange, do I see like a day that'll happen? I think I do. You're going to see, I think, an expansion of FINRA's coverage, because the thing about the centralized exchanges that the government has is they're telling you, centralized exchange, OTC, ATS, you cannot facilitate a trade unless the security in question is current in its Exchange Act reports. It's all about disclosure. So it's not that hard to imagine a Coinbase or a Kraken picking up that type of thing and saying, okay, if it's designated as a security, we won't trade it unless the disclosure is there. So I think that probably does happen. When you get the DEXs involved, then there's a whole analysis of like, are you like steering the front end and responsible, or is it just the back end and like anybody can access it, and that gets a little different.
And maybe just to add on, I think this brings up the point of regulatory arbitrage. I think certain jurisdictions may permit allowing certain securities to be traded on DEXs, etc. But then that worsens the problem of regulatory arbitrage, because then different nations, different jurisdictions would have different requirements, different KYC standards, etc. Ultimately, yes, to answer your question, but probably not on a global scale.
Probably not what?
Not on the global scale.
I'd like to go into Korea regulations. I don't know if you know or you may know, but yeah. So like, what is happening on the Korea scene, and how are they? You kind of touched on it a little bit earlier, but how is Korea dealing with all this that's happening? Are they moving fast? Do you think Korea does seem to kind of want to like protect their own industries a little bit? How are they looking at their, how is Korea going to be part of this new crypto world?
Actually, in Korea,
Hey guys, can we be a little quiet so we could hear her, please? Thanks, guys.
yeah, in Korea, virtual asset industry is not that beautiful industry to the government before, but new administration wants to digital asset industry become a future industry of the Korea. So they have intention to foster the industry, especially for the digital assets and industries for the America's legitimacy, and also they are preparing for some digital asset basic acts. But before that, we have already two kind of legislations. First is the Specific Financial Information Act, and this is something like the BSA Act, and the regulator's name is FIU, and it is some regulator which is like a FinCEN in the USA. Sorry,
That's a newer one for you guys.
this is not the new rule. This is from the year 2021, and they make some laws to become a virtual asset provider. They have to get the license from the government, which is called FIU, I already said. And year 2024, last year, there's some new legislation have been acted. And this is for the users protection law kind of things. And also they have some regulations for market manipulation. They are banning the market manipulation right now. But this is not for the securities or something like that, and only for the crypto assets. Actually, in Korea, crypto asset and securities problem has been finished. This kind of discussion has been finished for almost 3 years ago, because almost all the crypto assets are not securities in Korea. So VASP just can trade make them traded by the people in freely in the VASP. Like they are like CX or exchanges, central exchanges like Alpero or Vietnam, and yeah.
Are you just so as a simple question as a follow up to that? Are you optimistic on crypto in Korea?
Yeah, absolutely. Because I said that they are making in the Congress and the new administrative making some new laws, and they announced that the end of this year the new law will come to Korea, and this law will permit the ICO. So I think this is kind of big change in this industry, and the digital asset industry in Korea will be much more have many chances than before, I think.
Okay, one more. Why can't we order any food, Uber Eats, or anything in Korea? Joking, but it does suck. We tried like 5 apps over the last 3 days. It does not work. All right. So, okay, I want to take us into final topic here. I think we're running out of time. I want to see. So we have the Network State, or Network School, Network State event coming up. Are any of you guys interested in this? Because this is a panel on regulation and governance. And I think it's pretty interesting what's happening with this. Does anyone want to start talking on that? Yeah.
Yeah, I think this is really interesting. I think we've had regulation through enforcement in the U.S., which is probably the slowest way of getting clarity. And then we have more additional rulemaking, which is also a great way of getting clarity eventually. But what I think is the opportunity for network states is actually real-time regulation. And we've had this. It's like the original crypto ethos is, code is law, or maybe that's second generation even. Ethereum code is law. And then over for securities, we spent a lot of time making law into code, which is smart contracts. But the thing that I think is going to happen next is actually regulation as code. And when that happens, we'll be able to do atomic real-time checks of whether or not something is within regulation. And I'm very interested in that. And I think that will actually occur within network states first. And that will be a huge advantage for network states to have instantaneous regulatory clarity about specific transactions.
That's beautiful, by the way. I kind of agree. So, the U.S. legal system is 250 years old, something about that. And we designed in slowness, the checks and balances. You guys have heard about this stuff. Like we've got a bicameral house. Technology is going like that. We're here. We're on the vertical part of the asymptote. It actually, if anything, takes longer to enact law than it used to. So, from a network state perspective, you do get the advantage of like ground up design from this point in time. And I could go into it for a while, but there's a lot of like really good ideas. The problem with it, and it's not really with it, but the problem is that it's easy enough to get into a network state. What it's very hard to do is to get out of a current country. So even though, you can come up with all of this stuff, the issue is that like actually affecting it in a way, the United States is like, well, it's nice that you think you're not here, but we think you're here, and you're kind of stuck with that.
You basically, you have to renounce if you want, like, to me, the most alluring benefit, lower taxes, right? You have to renounce, right?
Yeah, yes, you have to renounce, and you have to pay your exit tax. Let's not forget that lovely thing that no other country on the planet does.
Michael Turpin had just told me about one of these. So there's a lot of these. Balaji's kind of idea is that we have a lot of these nodes, these network states around the world, and some of them may be physical, some of them are more just for fun, like Leaferland. But Michael Turpin was telling me about one that's happening. I guess it's spawning out of Indonesia, but it has no land. And so it's just like a pure virtual state. And I think he said that they have 3 countries that have recognized them officially and are offering passports, visas, this kind of stuff. So I think that's pretty cool. I mean, you could imagine a virtual state where if 100 countries recognize you and will allow you to travel between them.
Yeah, no, totally. I mean, you're kind of this is kind of why cruise ships are always like registered in like Bahamas and such. It's a similar type of thing. So you're not
Your country is registered in the Bahamas.
right. Your country is registered in the Bahamas. There's only a few places that have no law. Like you have no law in Antarctica, you have no law in international waters, you have no law in space. But the thing about it is, if you have no law that applies to you, it turns out that everyone's law applies to you, and whoever happens to want to enforce on you can. So that's why the boats are all out of some place instead of just kind of being their own free thing. I love the idea of a country that is acknowledging a network state just because it gives it the ability to anchor that way. So that, very interesting concept.
Anyone else have thoughts on network state?
Yeah, I think just to add my 2 cents, I think creating a network state is probably easy. Getting recognition and getting traction is difficult, right? Because that brings back to the point of regulatory arbitrage, etc. And I think that would be a difficulty.
Yeah, I mean, especially if you get big enough and you have a bunch of billionaires or millionaires leaving countries and going to these network states, you're probably going to see things like, more global minimum taxes and this kind of stuff.
I mean, the definition of sovereignty is being able to use violence to extract taxes. So, I mean, you going back to feudalism here, and yeah, I mean, Uncle Sam is going to get hits. And in my case, so is Uncle Gavin, because California, yay.
All right. Well, that was great, guys. Thank you so much. This was a pleasure. Let's give them a round of applause, guys.
I do.